This is Chris from FX Coins taking a look at the major U.S. indices. Currently, the U.S. is looking at the bulk of earnings season coming in, and some of the largest companies in the United States, as well as the world for that matter, are going to be reporting, driving volatility and momentum back into the market. That being said, it is worth noting that overall we are positive, and of course, the reaction on Monday from the weekend action between the Americans and the Chinese, perhaps getting a little closer to a deal, has had everybody very bullish and willing to take risk appetite. In front of you is the NASDAQ 100. You can see it is a bit quiet during the trading session on Tuesday, but that makes a certain amount of sense because we expended so much energy on Monday, gapping higher and then just shooting straight up in the air. The fact that we are comfortable here is a very bullish sign. It looks as if the 25,000 level should end up being support, and the large round psychologically significant figure will also have market memory built into it as it was significant resistance previously. The Dow Jones 30, which is actually the better performing of the three indices early on Tuesday, is breaking to fresh new highs. At this point, it looks like the Dow Jones 30 is going to try to get to the 48,000 level. Short-term pullbacks, of course, are going to be buying opportunities, with the 47,000 level being particularly interesting as it was the previous high, and of course it is a large, round, psychologically significant figure. All things being equal, this is a market that should rise right along with the other indices, but it's also worth noting that overall, the Dow Jones 30 does tend to be a little slower moving than the other two. The S&P 500 is, of course, looking very quiet in the beginning hours of the session here on Tuesday, which is not a surprise considering that the S&P 500 and the NASDAQ 100 are basically driven by the same stocks anymore. Short-term pullbacks are buying opportunities here, with the 6,800 level being significant support as it's the bottom of the gap from the Monday session and, of course, the previous high. All things being equal, it looks like the S&P 500 is a buy on the dip type of scenario and a market that is trying to get to the 7,000 level.